Welcome to Bloomberg BusinessWeek. I'm Carrol Massar.
And I'm Jason Kelly. We're here at Bloomberg headquarters in New York City.
This week, how traders are shaking up the stock market on Reddit, sparking wild rallies and even defying the coronavirus sell-off. That's our cover story.
Plus, the Harvey Weinstein verdict this week. We look at what's changed since allegations against the former movie mogul sparked the Me Too movement more than 2 years ago.
And Dr. Walmart will see you now. The retail giant has big plans to expand into healthcare.
We begin with the coronavirus. Warnings that the outbreak is on track to become a pandemic. They ignited a market sell-off this week and renewed doubts over the stability of the world economy.
Economics editor Christina Lindblad and markets editor Mike Regan joining us now with two stories in the magazine this week. It is all about the virus and trying to figure out the economic impact and also the market impact. Mike, we got to start with you because we haven't seen this type of global equity sell-off in some time.
Yeah, right. It's looking like right now about the worst sell-off since 2018. And what I wrote about is how it's very much calling into question what was kind of the narrative behind this whole bull market, which is the so-called wall of worry. In other words, we were hit with the European debt crisis. We were hit with the tensions with Iran, the trade war. And investors really love these sort of little metaphors and cliches that boil down a complex market into a simple notion like, oh, it's climbing a wall of worry. And
will it be a dead cat bounce?
Right. I know you guys hear these metaphors every day.
Every day.
Take the stairs up and the elevator down and a dead cat. They're all kind of applicable right now. But I think it's important, especially now, because Robert Shiller's out with a book. Actually, the magazine excerpted not too long ago called Narrative Economics. And it's basically about the notion about how these little narratives and the metaphors sort of are more important than you think in sort of dictating where the economic trends, where the market trends go. And I wonder if we're at an inflection point right now where that wall of worry made everyone a little too complacent, that the Federal Reserve, other central banks were there, they had our back, and that it was safe to keep buying despite the scary news. Now, this epidemic is much different because it's not clear what really a central bank can do to sort of counteract this, both a demand shock and a supply shock. So it's one of those inflection points where I think a narrative that the market had rallied on for a long time is in jeopardy of just going up in smoke.
Well, because part of what everyone needs to figure out, central bankers included and investors, Christina Lindblad, is what is the economic impact here? How do you measure it? How do you assess it?
Well, economists are also looking for stories or going back in history and looking for episodes like this that they could use to model what the global economic impact could be. So, we had the Spanish flu. That was obviously one of the worst episodes. 50 million people are believed to have died. We had the swine flu. So right now, the World Health Organization has stopped short of calling it a pandemic. But there are people out there modeling a result of a pandemic. And we've seen, for example, Oxford Economics say that could be 1 trillion of global output wiped out from an event like that.
Yeah, and I think it's interesting, especially when we talked about in some parts of the world, there were economies that were struggling before the virus, right? And whether or not this really tips them into recession.
Italy, certainly, and Italy could tip other countries in Europe into recession. And also, we were starting to feel better about the global economy because Brexit was receding, the trade wars were receding a bit. So that it was like the expectation that 2020 was going to be a year to rebuild, and that is now really off the table.
Well, and Mike, obviously the markets were paying very close attention this week to what the president had to say about that. We know the markets are always front of mind for him. Politics and governmental response, especially here in the U.S., plays mightily into the market story here.
Right, and President Trump's, his own narrative has been very influential on the market since he was elected. Obviously, he's very much a cheerleader for the stock market, for the economy. But this is a story that is kind of out of his control, where he's trying very hard to control the narrative around the market, trying to keep that confidence high, trying to get people not to panic. But it's one of these occasions where it's simply largely out of his control as far as how far this spreads and if we're really due for a China type of situation where we see quarantines in the U.S. And more quarantines in Europe that will really just snuff out the economic growth that's so important for the stock market.
Well, and I think such a narrative for a long time was everybody saying it's not going to be such a big deal, certainly in developed markets, and we've started to see that play out. In fact, it played out in the debates this week that we saw among the Democratic candidates. They brought that front and center, and I feel like all of a sudden it picked up a lot of momentum here in the United States and the impact.
Absolutely, absolutely. For a long time, it was interesting when the cases really were swelling and getting very serious in China. The whole market narrative was that, well, it's contained to China. It's not going to make it here. And clearly, obviously, it's leaked out of China. The issue in the United States now is I don't think there's a lot of confidence in what we know about the virus.
Right.
CDC hasn't really been testing that many people. We know there's this one case in California that they call, spread through the community rather than someone that was brought back from Asia. So there's a lot of uncertainty and a lot of sort of questioning of authority of what we're really dealing with right now.
One last question just quickly. China, though, it feels like we're getting maybe some containment in terms of the cases, but the economic impact, do we have a better feel on that, Christina?
Not really. I think the number of cases are slowing down, but there's particular concern. At a lot of large companies, people have returned to work, but smaller and medium-sized, workers in some cases are stuck back home because they went home for the Lunar New Year holiday. So.
Right.
All right.
Well. We're going to leave it there. Christina Lindblad, we know you'll be following this from an economic perspective. Mike Regan, the markets, they continue to dominate the headlines. Thank you both so much.
All right, for more on this week's issue, though, we want to get some of the bigger picture of some of the stories that were in the magazine this week. Let's bring in editor Joel Weber. So, Joel, good to have you here.
As always.
Cover story. I mean, you had to talk about the markets, but you guys had an interesting story on tap.
Yeah, so Luke Kawa was like, hey, have you guys heard about these Reddit boards, specifically Wall Street Bets, where a group of traders basically assemble and shoot around crazy stock tips? It's like sort of like late 90s all over again, like hot stock tips here.
Yeah.
And what's been incredible to watch is sort of their ability, even through this, the coronavirus sell-off, to sort of like actually move the market by specifically certain stocks that they sort of champion on the board.
Right. Yeah, it's a fascinating story, and I mean, very Bloomberg in some ways, but also very BusinessWeek, because it is this intersection of obviously big institutional investors. We talk about them all the time, but the rise of the retail investor in many ways is fascinating here.
That seems what's most significant about this, because when retail comes back, it might signal the beginning of the end to some extent. And so we're seeing some enthusiasm among retail that we haven't seen for a while. But there's also a certain sophistication that this audience has. So that's what makes it interesting as well.
Well, and it has to do with a lot of put call, options in terms of trading. But what's fascinating too is they're policing themselves too. It's like they have this kind of set of rules that they follow by.
And that speaks to the culture of the whole thing. That is sort of interesting and why it's so zeitgeisty. And if you don't know what tendies are, like that's a term that
has to do with chicken tenders.
Chicken tenders.
Just gonna say, I learned something.
So they popularized it, and it feels very zeitgeisty. And of the moment, and that's why we wanted to make it the cover.
Well, and the language, like Luke couldn't really get into it, but he says it's pretty vulgar, right?
Yeah, it's profane. And it's kind of exactly what you would expect from the internet, and like, even of the internet, like this is Reddit. It's sort of like a real underbelly of what you can see online.
Joel Weber, thank you so much. Great cover story, great issue as always. Up next, we're going to have more on that cover story, how Reddit's profane and greedy traders shaking up an already jittery stock market.
Our cover story by Luke Kawa, when the bull market gets weird. This is Bloomberg BusinessWeek.
Welcome back to Bloomberg BusinessWeek. I'm Jason Kelly.
And I'm Carrol Massar. Join us for Bloomberg BusinessWeek every day on the radio starting at 2 p.m. Wall Street time. You can also catch up on our daily show by listening to our podcast.
And you can find us online at businessweek.com through our mobile app, and you can watch us every day on YouTube.
All right, let's get back to our cover story. A band of Reddit users is hijacking stocks and defying even the coronavirus sell-off.
Reporter Luke Kawa went places we didn't want to go, so we didn't have to. Here's our conversation.
This has been one of the fun new developments to track in 2020 because for years we've talked about, like, when is the retail investor going to get involved with the bull market? When are we going to have that kind of 1999, late 90s type explosion in retail activity? And it didn't quite happen maybe the way we might expect, but it's really happening in the options market, and it's happening via a lot of companies that have a high nominal share price. So, your Teslas, your Amazons of the world, perhaps retail traders cannot actually afford to buy a single share of those names, but you can kind of buy options at pennies on the dollar and make these moonshot bets that increasingly we're paying off and spurring a lot of other recommendations for moonshot bets.
Well, take a step back. Tell us about this forum. It's on Reddit, so remind everybody what Reddit is and what the forum is specifically and what's being talked about.
So Reddit's kind of your classic internet online message board forum. It's divided into approximately a zillion subreddits where you deal with every subject. It has subjects for one of my favorites is the Spoiled Survivor subreddits, because I'm in a Survivor fantasy pool on CBS, and
right.
I gotta find out if there's any intel about how that season's gonna go.
There's a forum for everything.
For everything. So they also have this forum called Wall Street Bets, and it differs from our investing, which is another subreddit, and that these people are not aiming to take it as seriously. It's just really for this kind of this wild card, crazy action, this shoot by the hip type of opportunities they see trading. And there's a lot of profanity, as Jason alluded to, a lot of lewd language. It's definitely not PG-13 rated.
We can't talk about exactly, right? Some of the vulgarity.
Yeah, there's not a lot of screenshots I could be able to post, but there's also a lot of very smart, intelligent commentary that does seep through the cracks, I guess.
So, Luke, help us understand how this works with the use of options, because you have a nice line in the story. They believe they've discovered a kind of perpetual motion machine in the interplay of stocks and options. You alluded to this with the price of stocks, but how does this work? Because people really are, by all accounts, making money doing this.
Yeah, so the interesting way to look at it, or what they appear to think they've discovered, and unfortunately this came from something I wrote earlier on Tesla options and just kind of the dynamics, is that if you want a fresh call option, what you'll have to do is you buy it from a dealer. A dealer is not in the business of taking directional exposure. So as soon as the dealer writes that call, the dealer is taking the other side of your position. The dealer is de facto short Tesla. So what the dealer needs to do is buy the delta equivalent, to get into the Greeks, we won't go too far, but buy the delta equivalent amount of stock that corresponds to your call purchase to make sure they're neutral, to make sure that if the stock goes up, the dealer's protected. But if the stock goes up, the dealer does have to buy a little more. And this managing of your delta hedge is the way in which this community saw themselves as always having a get out of jail free card, as always having the greater fool to come and step in. Like in the late 90s, you just had to imagine it was there, and now they've invented a mechanism by which this can actually happen as long as we have the courage of our convictions to buy as many call options as humanly possible, especially in smaller names with a lot of short interests, relatively illiquid names. We're going to be able to kind of force this gamma chase on the part of dealers.
Let's be specific and give an example. Like I think you wrote in the story that Virgin Galactic, for instance, really wasn't on anybody's radar until these guys started talking about it.
Virgin Galactic, a crazy story. I think the best example, though, out of the list would probably be Lumber Liquidators. So that's, that's not as much of a story stock that you can get behind as, electric cars or space travel, space tourism. This is really, really kind of plain fare. But what was discovered is that somebody on this message board who had not posted but had been a member for 3 years laid out this very elaborate, lengthy at least, I can't go into the commentary on how good or not it was, but lengthy, long thesis for Lumber Liquidators. The next morning, call volumes in Lumber Liquidators, I think they were something like 77 times the 20-day average.
Right.
This was the only source of anyone talking about Lumber Liquidators at all. And that user was subsequently banned from the subreddit because even Wall Street Bets said, hey, we have to police our turf here. We can't let this be a ground for pure kind of pump and dump type schemes. That's not something we want to be a part of. One user lamented, I wish we could just go back to losing inordinate amounts of money, because that's what, that's the history of what Wall Street Bets has generally done on all of these kind of crazy calls.
Is this something that ultimately the SEC takes an interest in, that other market regulators may examine, or is this ultimately, as you alluded to, going to have to be self-policed, as so much on Reddit is?
The mounting evidence that, this is no free lunch here. There is no perpetual money machine. Just because you are the ones in the market and have the courage of your convictions and are loading up on call options, that doesn't mean somebody else who's a heck of a lot bigger is taking the other side. And that doesn't mean something like escalating concerns over the coronavirus can come in and just completely flip the table on you. Just the idea that we've been learning over the past few sessions is that, perhaps retail, although it's exerted immense power over parts of the market this year, maybe isn't always the end all be all.
From finance to economics, we turn now to this week's Business Week Explainer. British Prime Minister Boris Johnson is basking in what's called the Boris Bounce. That's the glow that surrounded him since his election win in December.
That's right. And now he has the UK set for the biggest fiscal stimulus since former British Prime Minister Tony Blair. Boris Johnson won the election by persuading voters in the former industrial heartlands to back the Conservatives for the first time. Now he has to deliver for them. For many people, Brexit was a way to channel anger about cuts to public services and their own living standards. If the Johnson government sticks to existing limits, Britain will get a spending boost of $39 billion starting in April. It's a huge contrast with recent history. Since Conservatives took office in 2010, they imposed more than $130 billion of spending cuts and tax hikes to reduce the deficit. The National Health Service and education were spared, but big cuts were made to welfare and social care services. Johnson invites comparison with President Trump, but the Trump stimulus focused on tax cuts. Johnson is boosting spending, especially on infrastructure. There's a loophole in British fiscal rules that would allow an extra $26 billion a year to be spent on roads, railways, and other capital projects.
Up next, why the HP Xerox battle shows print, or at least printers, not dead yet.
And then a little bit later on, my conversation with life coach Jesse Itzler. He only eats fruit till noon, loves Run DMC, and enjoys living life out of the box.
This is Bloomberg Business Week. Welcome back to Bloomberg Business Week. I'm Jason Kelly.
And I'm Carrol Massar. You can also listen to Bloomberg Business Week on the radio on SiriusXM Channel 119 and on AM 1130 in New York, 106.1 in Boston, 99.1 FM in Washington, D.C.
AM 960 in the Bay Area and London on DAB Digital and through the Bloomberg Business app.
And of course, you can watch us daily on YouTube. Check it out. Visit youtube.com. Search Bloomberg Global News. HP reported earnings this week, shares jumping after the company said it will boost share buybacks from $5 to $15 billion, $5 billion to $15 billion, in the hopes of fending off a takeover from Xerox.
Kaylee Lyons joins us now with a chart to help us understand the context here. This is a fascinating little battle we got going on.
It absolutely is. And of course, Enrique Lores is trying to shield his company from this, and his latest round of trying to protect it is by sweetening things up for shareholders with this buyback. And the buyback will mean more profit for fiscal 2022, probably between $3.25, $3.65 a share.
Well, it's but we know basic math, right? Because you take shares out of the public market.
Exactly. And HP has already done a lot of that.
Yeah.
If we look at this chart, the last price is what we're looking at in the white line. So that's the actual share price of HP. The blue is the market cap, because this isn't the first time HP has done this. It has actually already removed about 20% of its shares from the market. Not all of that has been buyback. Some of that is related to executive compensation, but that is why you're seeing the actual value of the company trailing the gains that its shares are making.
Yeah, it's great perspective in terms of what's going on. We talk about companies all the time doing buybacks, to make shareholders happy, but it doesn't necessarily change anything in terms of the fundamentals of the company.
Well, and it comes at a cost, literally and figuratively, and changes, as you say, sort of the math and the dynamics, both with investors and potential suitors.
Yeah, absolutely. I mean, and when you consider this potential takeover, HP is kind of becoming a counter bidder against itself here, because if it does buy $15 billion worth of its stock back, and Xerox's latest bid was $24, it could actually have a share price that comes in above that. That's a very interesting dynamic.
Great HP chart. Kaylee Lyons, thank you so much. Appreciate it.
I feel like I got smarter just then.
We always do.
That was really
when
good.
she comes by.
All right, HP, is it still worthy of a takeover fight? That is the focus of a feature story in the magazine this week.
Here's my conversation with reporter Austin Carr on how HP got here and that possible deal with Xerox.
And I remember back to that period in 2015, Meg Whitman essentially took the cloud and AI and consulting parts of the business, which are the, quote, sexier parts. I mean, if you talk to everyone at HP, they admit that was this sexier stuff to take. And HP Inc., which is was stuck with the printer and PC business, which were at that time seen as just dying. And then they had this turnaround, which was partly led by their current CEO, who used to lead the printer division. Sales shot up between 2016 and 2018. The stock shot up. PC sales even rose during that time, even at the smartphone era. It was really a fascinating case study in how to sort of manage in an age of decline with all this digital disruption. They were really an analog growth story, which is shocking and really impressive.
Okay, so we've often talked about this when there's an M&A deal, and you've got two companies that are maybe struggling, and they know they've got to do something that maybe putting two struggling companies just creates a bigger struggling company. You've got a great quote in there by Tony Saganahi. He's a longtime HP follower. And, you know, it's interesting about kind of talking about garbage companies, waste companies.
Yeah, so Tony was actually referencing a quote used to describe the HP Compaq merger of the early 2000s, which is
not good.
It's I guess the jury's still out. Some people are split on it, but it was at the time described as two garbage trucks colliding. And so Tony is questioning, who's an analyst, a longtime cover of HP, is just sort of comparing it and questioning whether is that the future of this deal? Just we know where this market is heading. He says the printer business is collapsing. Do you just want to combine these two garbage trucks essentially? And it's so interesting because just a few years ago they were compared to creating ink sales were compared to selling champagne and caviar. That was really what it was. It was arguably ink cartridges cost more than perfume, and so it just suddenly now they're compared to garbage, which is a real 180 here.
But what's interesting though, then another analyst counters, you know what, the garbage business, it's a big business.
Yes, it's fun. It's so amazing. I mean, all the sources that we spoke to for the story, longtime HP lifers, the obsessives of the company, and they just say, hey, it's not sexy. It's not, the future of computing, but it is massive and it makes a ton of money.
So then what happens from here? I mean, Xerox has already upped its bid for Hewlett-Packard once, and we know Carl Icahn is pushing big time to do some kind of deal. I mean, do we anticipate that HP will ultimately make an offer for Xerox? What are you hearing?
What I'm hearing right now is basically it depends on how HP fares in the next year. Over the past 2019, couple of quarters, about 3 quarters, their printer ink sales declined. And that was a real big problem considering that's how much all their profits come from essentially that division.
That's their business, right?
And so understandably, that opened the door to a company like Xerox, which is about a third of its size, and activist investors like Icahn to come in and try to buy them. So they unrolled this big plan earlier this week on Monday for their earnings call. And if they can live up to those expectations, maybe that will be enough to just say shareholders to say, hey, you know what, we're fine. We think there's value to be created here, efficiencies that HP can find on its own without Xerox. At the same time, that's a risk. And Icahn and Xerox are offering a higher share price than what's on the market today.
Right.
So maybe that they just decide, I mean, it's going to be left to a vote, essentially. They're going to have to decide, hey, you know what, do we trust this deal of today versus what HP can deliver tomorrow?
Do we have a date in terms of a vote yet, or it's still kind of fluid?
It'll be a while. Tony had actually told me, the analyst had just said that there's a lot more twists and turns left in this saga.
And is there anybody else who might come in? Like, I always do wonder when there's two big, tech giants or tech companies out there. Is there anybody else that everybody's talking about that? Okay, maybe they come in and they start to be either a player with HP or Xerox.
That's a really good question. I've heard so many theories floated over that. I mean, people could see someone swooping in just to buy their PC business rather than the printer business and chop it up for parts. There's a lot of theories about HP should just turn around and buy Xerox, as I'm sure you've heard over the past couple of quarters. I think it's really TBD at this point, but all I know is that what Enrique Lores had said to me is, look, this is not a war. And what he meant by that is he wants to stop a war from happening. He wants to stop a hostile takeover. He wants to unroll a plan that convinces shareholders that HP should stay on its own.
Up next, this week's Harvey Weinstein verdict.
That's right. We look at what's changed since allegations against the former movie mogul sparked the Me Too movement more than 2 years ago.
This is Bloomberg BusinessWeek.
Welcome back to Bloomberg BusinessWeek. I'm Carrol Massar.
And I'm Jason Kelly. Still ahead, Walmart's cheap checkups. The retail giant making a major move into health clinics. Maybe we'll call it Dr. Walmart.
We just might. Plus, if you love Tough Mudders, you love it, right?
I do.
All right, then you've got to try Everesting. I sit down with entrepreneur and millionaire life coach Jesse Itzler on his latest endurance challenge.
And a sobering story in this week's issue about the cost of running an abortion clinic in Austin, Texas.
That story by Rebecca Greenfield. She runs our diversity coverage at Bloomberg News. And with the Harvey Weinstein verdict this week, convicted of rape in a criminal sexual act more than 2 years after allegations against the former Hollywood power broker really sparked that Me Too movement. We started there and with what's changed.
Awareness has definitely changed in the workplace that sexual harassment happens and it's not okay. And there have been shifts both formally and informally. More employees than ever undergo mandatory sexual harassment training, but also the type of training has changed. So bystander training focuses on training people in the workplace who aren't necessarily involved in the harassment to see it and to notice it and to be able to identify it and to be able to know who to contact and what to say. And research has found that is more effective than just the kind of training that we all know where it's like, this is sexual harassment.
Don't do this.
If this happens to you, it's wrong. Don't do this. You might get fired.
There's also some things like a Weinstein clause, right? And this is in M&A deals. Tell us about that.
Yeah, so there are these things called the Weinstein clause, which is in M&A deals where they basically protect the buyer if something happens, like somebody important, like say the CEO or the chairman, gets called out for sexual harassment, that the buyer can recoup some of those losses because there are severe reputational damages that come in the era of Me Too.
One of the things, and I just want to go, one last thing is things like NDAs, non-disclosure agreements, or even arbitration, which we've seen in a lot of companies, certainly in the financial community, technology community, that really prevent when something happens for it being, put out to the wider public. That's slowly going away.
Yeah, I think these, what were considered standard tools, ways to just handle harassment claims are now being seen as ways to cover up harassment claims, especially for repeat offenders. So the non-disclosure agreement is definitely under scrutiny. Bloomberg LP and Condé Nast just last week said that they were going to stop using them for sexual harassment claims. Some other organizations have let people out of their non-disclosure agreements so that we can really get some sunlight on these accusations. I would say forced arbitration is the other really big change. It's a dispute resolution process that lots of companies use for lots of things. But in sexual harassment claims, it's again seen as this way to litigate these claims behind closed doors, and that again, if there's a repeat offender, nobody's going to hear about it. So multiple companies, Facebook, Alphabet, and recently Wells Fargo have said that they won't use that anymore for sexual harassment claims.
So change has happened.
Yeah, it's real.
All right, so some forward movement on that, but I feel like there's a story in the magazine. It's a really sobering story, and changes have happened, but I feel like we've gone backwards, and this has to do with abortion clinics, and you really go into what's going on in terms of running abortion clinics in the United States. Let's talk about this one. Tell us about, you have several interesting characters. Amy Hagstrom Miller, tell us about her.
Yeah, so you may remember her as the face of a victory in front of the Supreme Court 4 years ago, or less than 4 years ago, Whole Women's Health versus Hellerstadt. She won a 5-3 decision that overturned this Texas law that said doctors had to have admitting privileges at hospitals nearby if they were going to perform in abortion clinics. And she won that case. That case had closed her clinic because it's a really almost impossible standard for abortion doctors to meet because they don't actually send very many patients to hospitals, so it's hard to get privileges.
Right.
And it closed her clinics, and it closed a lot of the clinics in Texas, and so that was a big victory for her that she won. And I remember, I mean, you might remember at the time, it was a big victory for abortion rights activists. So
big step forward.
Yeah.
And then,
you know, we checked back in with her, and you know, she opened back up one of her clinics that closed, or some of her clinics that closed. And this Austin clinic was targeted by an anti-abortion group that basically forced her out of her lease where she had been for a very long time by offering her landlord a big commitment, a 5-year commitment, saying we can pay you for 5 years. And the landlord said, can you match that? And she said, I don't have the money to match that, or I can't give you the money to match that. So it forced her to move out of this space, effectively shutting her down again for reasons that had little to do with the laws.
She's coined this phrase, an abortion tax.
Yeah.
Tell us what that is. It's not an official tax, right? But in essence, it is.
Yeah, so
doing business.
It's something we discovered, and she had this great way of phrasing it, the abortion tax, which is added fees or costs or burdens that just because you're in the business of abortion, you have to pay. And that's things like spending a bunch of months and $100,000 to move because somebody forced you out of your lease. That's things like, you know, a window washer is not going to work with you because they're telling you that, you know, your windows are too old, when this abortion provider said, I can read between the lines. They just don't want to be in business with me. Or having to find a waste management company that's not being targeted by activists because the ones targeted by activists, they don't want to be in that business. And so it's just this litany of expenses that add up, making it really difficult, if not impossible, to stay in the business of abortion.
Essentially, an abortion clinic in many ways is a small business, right? And we know that there are so many challenges for any small business out there, but this is like a whole other layer on top of it. So what has it meant, Rebecca, in terms of we have less abortion clinics?
Yeah, so there are fewer independent abortion clinics, about a third fewer since 2012 in the U.S. And also, there are fewer abortions in states that have been the most harshly targeted by abortion restrictions that close clinics down. So there's definitely some trends that we can point out.
And it's interesting because you guys have some great statistics in there that this is happening, and this is at a point where if you survey most adults, right, they are in favor of having an abortion option out there.
Yeah, I think going into the story, my understanding of abortion too was we talk a lot about Roe v. Wade or these big Supreme Court cases, but if you get on the ground, there are so many other issues that clinics are facing, or that women who want to get abortions are facing, that really have little to do with Roe v. Wade. And I think that's what our story, I hope, shows.
And we do want to point out Michael Bloomberg, of course, also seeking the Democratic presidential nomination. Bloomberg is the founder and majority owner of Bloomberg LP, the parent company of Bloomberg News. And Bloomberg's announcement to stop using non-disclosure agreements, NDAs, came after Michael Bloomberg was criticized in a Democratic presidential debate for their usage. He also said he would release 3 women from NDAs with his company.
Coming up, the doctor is in at Walmart. The retail giant has big plans when it comes to your health.
Big plans. Plus, entrepreneur and millionaire life coach Jesse Itzler on his latest endurance challenge. This guy has the coolest life.
I know, what a cool interview. This is Bloomberg BusinessWeek. Welcome back to Bloomberg BusinessWeek. I'm Jason Kelly.
And I'm Carrol Massar. Join Bloomberg BusinessWeek every day on the radio starting at 2 p.m. Wall Street time. You can also catch up on our daily show by checking out our podcast.
Plus, you can find us online at businessweek.com and through our mobile app. And you can watch us on YouTube. Just visit youtube.com and search Bloomberg Global News.
And that's where you'll find interviews like this one with Axel Heifer, CEO of online travel business Trivago. Bloomberg's Vince Signorella and I talked with him about how the coronavirus is impacting the travel industry.
I mean, it's not really something that you can see as a company. It's more a judgment call, what you think where the virus is and its overall, development. I mean, I'm thinking back to the SARS virus
Is it similar? Do you feel like that? It's a fair comparison?
I mean, I don't know, but I lived actually in Singapore, which was one of the centers of the outbreak. So I have some awesome personal experiences there, and to me it was very clear that at some point in time it felt much safer, and that was when the numbers of new infections came down. There was a clear structure and a way that worked to really reduce the number of new infections. And just using that personal memory of mine and applying it to the current situation, that we don't seem to have reached that point, and for sure not in Europe, but probably also not in most of the Asian markets. So we as a company do expect this to continue for some more time. On the other hand, if you think back again of SARS or the swine flu, at a certain point in time, the moment that I'm describing, there is increasing comfort to travel again. So the recovery, at least in the past, has been quite quick, and that's also what we would expect once things have stabilized.
That's what I wanted to ask you, if you feel like there's any lasting impact of something like this happening, or do you feel like that travelers, they bounce back pretty quickly?
So it might be different for different companies, to be honest, but our main product, our only product, is accommodation search. And so for us and for our users, it doesn't really matter where they travel to.
Right.
So if people in the future will be more reluctant to fly somewhere, that is not necessarily something that is impacting our business. So what's driving our business is overall traveling. Are you traveling somewhere? And I don't think that will be impacted by the current situation. I don't think it had really a long-term impact in the last comparable situations. Certain segments might be affected for some time, but it's difficult for me to judge.
Well, it's already the world's largest retailer, but did you know it also already has a $36 billion pharmacy business, and now it wants to move more and deeper into the healthcare business.
Jason, we're talking about Walmart. Here's our conversation with retail reporter Matt Boyle.
Walmart already has, as you said, a big healthcare business. They are the 400 million prescriptions a year, a $36 billion business, but they want to get deeper into healthcare spending. It's $3.6 trillion of spending in this country. It's disorganized. It's confusing. Nobody likes, paying for healthcare. They don't know what they're going to pay. Walmart's like, we can bring, some clarity to this. We're Walmart. So let's go ahead and do it.
What's interesting, Matt, and Jason, I don't know if this jumped out at you as well, but I mean, Walmart already has 150 million weekly customers, right? So think about that's their base that they can already maybe tap into for healthcare.
Exactly. They've got all those people going into their stores already. A lot of them are lower income. A lot of them are either uninsured or underinsured, or they don't like their healthcare plan. Walmart's saying, hey, you're coming in for groceries already. It's a Saturday afternoon. Do you need a flu shot? Is your kid sick? Do you need a tooth cleaning? And the people they are seeing in these new centers, now granted, there's only 2 so far. The third one's going to open this summer. But the people they are seeing in these health centers, some of them have not been to a doctor or a dentist in over a year.
This is not a totally new concept. And I think about what's going on at CVS specifically, and some of the other big box or I guess not big box, but more the idea that the doctor's office is moving into retail in a lot of ways. So they're not alone here.
Yeah, they're certainly not alone here. CVS is going very heavy into this as well with their new health hubs. They want to have 1,500 of them by the end of next year. But this is really rethinking retail healthcare. The problem with the care clinics or minute clinics, as CVS has called them, they've been around, over the past decade, but they're cramped. They're small, and the problem on the retailer side is they never see enough volume to justify their fixed costs. So for that reason, Walmart has had these for the past 6 years, but they only have 19 of them. With these new health centers, they are really blowing it out. These things are 6,000, 7,000 square feet, 12 exams rooms, eye care, dental. If you can't hear the doctor, they'll send you in for a hearing check even. I mean, and then of course, when you're done, they move you right out to the pharmacy.
Well, tell me how this works. And that's what's amazing. They're big centers, as you said. You can have your teeth cleaned. You can get counseling. Let's say you have anxiety problems or other problems. Want a lab test on Sunday? I would love that. It's a little bit more convenient. How cool. They don't, though, take insurance, right? And they've got a price list.
They will, but they are guessing most people, even if you have insurance,
right?
If you don't want to deal with the copays and the deductibles, you might just pay the flat cash fee. So when you're signing up for your appointment, you do tell them, do I have insurance or not? Am I in Medicare? And they will adjust for that. But for a lot of people, they might just say, I'll just pay the $25 flat cash fee and not have to deal with Aetna or Blue Cross or whatever. So for the insurance companies, they're probably thinking, So yeah, Walmart is really, disrupting the healthcare sector here.
But what about that price list? And I am curious, right?
Yeah.
I don't know if you thought about this, Jason. I see, the insurance claims and what things, supposedly cost, and then what they've kind of negotiated, right, with the provider. So what is the price list like?
Walmart wants to simplify all of that. You walk in, there's a huge digital billboard just saying, here's all the prices. Teeth cleaning is $25. Mental health, $1 a minute. I mean, that's a real interesting one. There's a lot of these retail healthcare clinics historically have never provided mental health.
Right.
And often you walk in, let's say you get a physical checkup, and the doctor notices you're really anxious, or maybe you've just been diagnosed with diabetes, you're worried. They can send you right over to the next exam room where people, you'll get the counseling you need. Now, of course, any doctor will do that, but it would require you normally to book another appointment with a therapist.
Right.
And then who has time for that? And a lot of people wouldn't end up following through. But at Walmart, they just shuffle you into the next exam room. And I think that model will work for a lot of people.
I believe this is not their first go at this, right? They've experimented at least on the margins here, and it didn't go so well last time.
Yeah, I mean, they've been doing this for some time. The original, retail health clinics did not work for Walmart. They didn't really work for anyone. Walmart has also been distracted by other strategic priorities. Remember, they're the biggest retailer in the world. In the 90s, they were building out supermarkets in the food business. And over the past 5-10 years, they've had to build out their e-commerce business to battle Amazon. So healthcare has never been a real strategic priority for the company until now, though. And now it certainly is.
Still to come, scaling Everest.
That's right, millionaire life coach Jesse Itzler on his latest endurance project and building your life resume.
I could use some work. This is Bloomberg BusinessWeek. Welcome back to Bloomberg BusinessWeek. I'm Jason Kelly.
And I'm Carrol Massar. You can also listen to us on the radio on SiriusXM Channel 119 and on AM 1130 in New York, 106.1 in Boston, 99.1 FM in Washington, D.C.
AM 960 in the Bay Area, in London on DAB Digital, and through the Bloomberg Business app.
And of course, you can watch us daily on YouTube. Check it out. Visit youtube.com, search Bloomberg Global News.
And now to a Pursuits follow-up. We spoke a couple weeks ago, you'll remember, with reporter Anders Mellon about his story, scaling Everest in Vermont.
Yes, he did that. And I actually sat down with the coach behind that endurance challenge. He's Jesse Itzler. He also co-founded Marquis Jet that he sold to Berkshire Hathaway.
Then he partnered with Zico Coconut Water. He sold that to the Coca-Cola Company.
And then when he's not running ultra marathons, Jesse can be found at the NBA's Atlanta Hawks games, where he is a co-owner of that team. Here's our conversation.
I'm a big check the box and move on guy. So I really just want to, I have a big appreciation for where I am in my life. And I believe in building my life resume more than my traditional resume.
Right.
So I'm just always kind of like finish something and on to the next.
Never looking back.
No. You know what, Carol? I want to go through this life and at the end of the journey be like, I don't want to look back and be like, I was the 80% version of myself. So I really am sensitive to how much time I have left.
Yeah.
And just, trying to do as much as I can.
Right. Because you could, right? You're financially set that you could kind of just do whatever the heck you want.
Yeah.
But you continue to help other people. Talk to me about this life coaching that you're doing. We talked about this, wrote about it. Mm-hmm. Anders Mellon wrote about it in the magazine. Tell me what you're doing and why you're doing it.
Well, I've had a very unorthodox business journey. I started out in the music business. I had a private jet company. I got into coconut water with a company called Zico, which we sold to Coca-Cola.
Right.
And everything in my life, it wasn't really planned. I kind of just fell into it and started the process and turned it into a business. And this is no different. I wrote a book called Living with a SEAL about a Navy SEAL that came to live with my family and myself for 31 days. And it led to speaking engagements and this and that, which turned into people wanting more.
Right.
They want to know more about, well, what's it like? We're all wired to and told to be around like-minded people. And like-minded people tell us like-minded things, and we learn from stepping into the unknown and being around people that aren't like us.
Right.
So
Getting a little uncomfortable, I always think.
Yeah. So when I look back at my life and the various life experiences, I believe like the more you experience, the more you have to offer. And it just morphed into people asking me a lot of questions about business, about parenting, I lived on a monastery for almost a month. And it just led to a lot of questions that, how could I help the most amount of people and share my experiences in these different buckets? And it turned into a coaching program.
Well, tell us about this coaching program. Who actually are the people who come to do it? These are pretty successful people, right?
Yeah.
In various walks of life.
Well, it's people from all different stages of life. It's from CEOs to moms and dads that are just feel overwhelmed and are looking for guidance. It's called Build Your Life Resume.
Right.
And it's really, it's interesting because it's not a business coaching course, although I offer business strategies and tips from my journey. It's really about, most of us play defense in our life. Like our calendars fill up with appointments and meetings and weddings and all these different things, and our calendar's full, and like the year goes by and I'm like, what do we do this year?
Yeah.
And this is really about playing offense. It's about, what do you want to do? What are the things that you want to prioritize? What are the races you want to run? What are the adventures you want to take? What's the RV trip you want to take with your family? And scheduling that first, prioritizing yourself first, and letting those other appointments fill in around that. So at the end of the year, when you look back, you're like, whoa, I accomplished da-da-da-da-da-da, instead of, wow, I'm living in routine and I'm going through like this, life like this. Then all of a sudden I'm 78 and I'm like, whoa, I can't run that marathon anymore.
Right.
It's
being much more on the offensive, right? Is what you're saying.
Playing offense.
And not being defensive. What's interesting, though, is it's physical, right? This is the equivalent of I think the way we wrote it in the story, or Anders wrote it, equivalent to kind of climbing Mount Everest.
Well, I have an event called 29029.
Well, that's what I want to talk a little bit about.
Yeah.
That's separate?
It's separate.
Yeah.
It's separate. There's an old Japanese ritual. I learned about this from a guy named Kyle Korver who played for the Hawks, called the misogi. And the notion around a misogi is you put one thing on your calendar so hard every year that that kind of defines the year, and the benefits last the entire 364 other days of the year. And I was thinking, looking for something I could do with my wife and my friends in the endurance sports kind of category, because I'm an endurance athlete.
Right.
I love the celebration around endurance, how it makes you feel when you accomplish that, et cetera. I wanted to share that with more people, but I was frustrated because a lot of the options required you to be a great swimmer, an obstacle course racer, or a great runner, and that eliminates a big pool of people.
You had to do so much to get to that point.
Right. So I wanted something that could reach a wider group and a wider audience. So we created this event called 29029, which basically is, we rent a mountain, you hike up the mountain, you take the gondola down, and you repeat until you climb the equivalent of Mount Everest.
Right, and you do it within a set amount of time,
within
right?
36 hours.
Yeah.
So we've had 8 sold-out events, and my wife has participated, and I know you know my wife.
Sarah Blakely, founder of Spanx.
Yeah. And there's no winner. It's just kind of like a you versus you challenge.
Yeah.
And it's really something where, what I love about endurance events,
Go.
They force you to be where your feet are.
Yeah.
And they force you to be super present in a really busy world. And these challenges have been amazingly successful because they're outdoors and they come down to one thing: will.
Yeah.
Not like, I'm this amazing Olympic athlete, but like, do I have the will to stay in and do this?
And you can hear more of that interview with Jesse Itzler. Check that out on our Business Week Extra podcast. This is a person who's living life to its fullest.
A little jealous you got to do that one all by yourself. All right, Bloomberg BusinessWeek. It's available on newsstands now.
It is indeed, also online at businessweek.com and on our mobile app.
So what's your must-read this week?
My must-read is a story by Rebecca Greenfield and Cynthia Coons talking about abortion clinics and what it's like to run them today. Keep in mind, abortion has been legalized now for decades. You'd think it would be easier to run a clinic. That is not the case, and this story gets into those who are running clinics, the personal stories, and the reasons why it's becoming much more difficult. It's a sobering story.
Absolutely, truly a must-read.
Your must-read.
Austin Carr and Nico Grant on HP Xerox. What a saga that is. I love a good deal
And it isn't
story.
over.
And some great characters in there. Really enjoyed it.
Gotta love a story that starts with the cost of a printer cartridge.
Who knew?
It's really interesting, though. All right, check out our Daily Business Week podcast as well. You can also watch us on YouTube. Just visit youtube.com, search Bloomberg Global News.
And more Bloomberg Television starts right now.